Today I'll restart the investing challenge that I had going. This is going to be the new episode 1. The idea behind the challenge is simple. We're going to take 10k and grow it into 100k through value investing and saving money like crazy. As you can probably tell, I have no idea when we're going to hit this target. I think we'll be able to do it in the next 3 to 5 years. So stick around. First of all, I want to look at the Dow Jones Industrial Average here over the past month. We can see that we're up with almost 5%, 4.5%. So the market seems to have rebounded pretty nicely after a lot of fear. The fear and greed index here has also returned to around neutral. It was almost in extreme fear here a month ago or so. I started the month off here, March, with putting a little bit of money into the account. Then I sold out because I really wanted some cash, guys. I needed cash because there was a lot of companies that I would like to buy, and some of them I have already bought. So you can see, I have already built out my entire position in PayPal, which tanked. I don't want to add any more to PayPal. Then I started buying BABA, right? And I had almost no, I think I had 2k in the account, right? I wanted a bit more cash. I decided to put some money into the account, and then also a huge decision was to sell out of my Barrick Gold position. Looking back at that, that hasn't been the greatest decision of my life. It just went up another 10% or so. I was up 20% on my Barrick Gold investment. So I decided to cut my gains there because I wanted this cash, and I was actually content with the gains that I had. And when I looked at BABA from a value standpoint, it didn't look as that great of a deal anymore. So I decided to get out, and the stock prices continued to rise since then. But I've actually been pretty lucky with timing the market, some of my other sellouts. So I guess I can't be as lucky every single time with my sellouts here. I sold out my entire position here of Barrick. I sold out of gold because I saw a lot of greed in the gold market. And as Warren Buffett says, you want to be greedy when others are fearful, and fearful when others are greedy. So you kind of want to do the opposite there. And what I decided to do was buy a lot of stocks when people were fearful, like a month ago with the war and all these things. I was buying pretty much every day, different like PayPal and BABA and these companies. That money had to come from somewhere, and that was then the Barrick investment that had to go there. In regards to gold, that has been pretty good at saving me the past year to date, right? That has kept my portfolio afloat. I've changed my perspective a little bit about these gold mining companies because I really would like to just track gold as a commodity if I were to buy gold. I don't want to have the fluctuations in individual companies and the risks of that. So what I'm thinking about doing is buying this ETF, not right now because I simply want a lot of cash right now, but if the situation continues and inflation stays high, I might have to switch that cash into something else so it doesn't just sit there and devalues. I also got some dividends from Barrick, which was kind of strange because I sold out 2 weeks before the dividends payout. So I got here 10 bucks of dividends when you subtract the tax. Yeah, well, here the buying starts. So first of all, I went ahead and bought some Meta platforms, 5 shares of those at a cost of $228 per share. A couple days later, I went ahead and bought some more BABA, 7 shares of BABA. So I'm now up to 13 shares of BABA. So I have a fair price of BABA of around $300 per share. And that is with a 12.5% annual return baked into that. So basically, that is my price, fair price that I should be buying it at, and then I'll get a 12.5% annual return. PayPal, I don't want to own any more of. I was buying as it went down here after their earnings and I was buying as it went down here. My average price is around 118, so I was up a bit, 5-10%, and now I'm down again. So yeah, it goes up and down, but my PayPal position is built out, and I'm now scooching that into the back, taking it off my watch list. I don't want to look at it anymore, and then I'll look at it in a couple of years and determine what I'm going to do at that point in time. That is in regards to BABA and PayPal. In regards to Facebook, or Meta, I bought 5 shares of Facebook, so I started my position here. So those were the new stocks that I've bought. My current holdings are Ørsted, which I have in another account. Ørsted is way too big a portion of my portfolio right now. PayPal is around 15%. Baba is around like 8%. Corsair, Tattooed Chef. Don't ask me why I hold this company. It's a very, very high risk, possibly rewarding company, but I'm down 40%. So yeah, don't go out and copy me here. Facebook just started buying that, and then we have this one here, the index of the Danish market that I bought a couple months ago. Up on this investment a bit, but this is like 2% of my portfolio. Those are the current holdings of the portfolio here. I think that is 7 holdings. My plan is to hopefully sell out of some of my position in Ørsted to get that cash that I can then put into my higher, the companies that I really want to, I want to average down my cost in Corsair. If it gets under $20, I'll definitely buy more Corsair. Baba, I want that to be a bigger percentage. I am not sure about Facebook. Maybe buy 5 more shares or so. Here's the breakdown of the account for the past month. So we started out with a 4% dip, and we finished off a 1.5% in the green. So yeah, we've had ups and downs. You can see here I was up 6.5%, and that was because we had some good days with the new stocks that I bought. PayPal, Baba, and Facebook. They all carried up like when we have some good days. So I was up here, and then it's kind of chilled out here the past couple. Still, I'm up 1.5%. That is 1.2k Danish crowns. I do hold quite a bit of cash right now, 30k of the 51 that is in the market right now. I really want to profit from declines in the market, and also, as you can see here, we have Meta earnings coming out. That is pretty much the portfolio here. The 3 months we are up 5%, and the past 6 months we are up 2%. No, down 2%. Yeah, okay. This year we are up 1.3%, and that is outperforming the market because of my gold investments. That is outperforming the Dow and the S&P 500 and the Nasdaq also, I think, by like 6% or so. But don't get too excited, guys, because if I go back here, I'm still down 10%. Yeah, I made some stupid investments in Tattooed Chef, for example, where I haven't been able to average down my average cost, so I've just been sitting with that investment, and that is some really important lessons that I've learned. But right now, all I care about is establishing my positions. I want to establish my position in Baba, Corsair, PayPal. I already did that in Facebook. All these value plays that I see right now, I want to establish my positions, and then I basically just want to chill, because I'm going to like a, what is that even? I'm going to like a 10th grade school next year, where I'm going to like stay there and not be here. So I'm basically going to like move. I can't have time to sit researching stocks all day when I get there. So I just want these good companies bought, and then hopefully in the weekends I can like look at it a little bit, but simply I haven't got time to establish a lot of new positions when I'm there. So that is why I really only care about establishing the portfolio and getting into the right positions. I want to get out of some positions, out of some of my Ørsted, hopefully out of some of the Tattooed Chef, or I don't know what's going to happen with Tattooed Chef, to be honest. We will see. I think it could skyrocket any time with their quarterly results coming out and them doing really great. It's because they're unprofitable at the moment. That is why people are uncomfortable buying. You know, it is a weak company. You can say that from a financial standpoint, and that is not the sort of stock that you want to own going into possibly a recession, right? Yeah, holding a lot of cash, but sticking to the value plays. That is the theme here. So this next month's watch list is buying Baba, at least 8 shares of, around 8 shares of Baba, if it goes under $100. So it's like 103 right now. Facebook is at 120 right now. I'm going to add 5 shares. If it goes under 100, I might even add before that, but no, I really want that cash. So probably goes under 200, I'm going to add 5 shares. Here are the 3 stocks I'm looking at: PNDORA, Walgreens, and Pulte Group. Let me show you why these are some plays that I'm looking at. First of all, let's start with PNDORA. PNDORA is a jewelry brand. You've probably seen like their necklaces. They have some like iconic necklaces. They partner with different celebrities, so you've probably seen it before, but the underlying theme here with Pandora is just great value. You can see they have high returns on the invested capital, the equity. They pay up dividends that they can easily afford. They have low price to sales, low PE. They have low price to sales, low PE. They are not a large cap, they are mid cap stock. And when I put it into the stock analyzer tool here in the Everything Money software with conservative assumptions, these are like, I would say, very conservative assumptions, I get all green. Pandora is definitely one that I'm looking to add some shares to. Another one is Walgreens. You can see here with very conservative assumptions. These are way too conservative, honestly. But you know, it's almost all green here. So this is 2% growth. I mean, you could probably see them doing more like this growth here over the next 10 years. I think the fair price is around $70. I've also seen other investors, their price target being around $60-70 for Walgreens. Not my, highest priority getting into Walgreens at the moment, but definitely one that I'm looking to go into if I don't see any other better deals. I don't have a specific price target that I'm going to buy because it just looks like a good price at the moment. Pulte Group, guys. This company is insane value. This is a home builder. They build homes, and the risks of this is pretty much the whole underlying sector, which is the housing market. And when I write to people on Reddit and these different forums about Pulte, they seem to all be scared about being in a housing bubble. A housing bubble. That is what they're all scared of. I don't know about Pulte, but everything, the fundamentals looks great. They have a great financial position. They have growth. They have return on invested capital. They pay out a 1.4% dividends. That is nothing for them. They can easily afford it. And they also buy back a whole lot of shares. I mean, the multiples that this company is trading at, just crazy. 9 times price to free cash flow and 8 times price to earnings ratio. The multiples are insane in this company, and if I put in my assumptions about the future, I also get pure green from Pulte. So the only thing is this, well, everyone seems to think that there's a housing bubble, so I don't know whether to believe that or not, but I might start a position in Pulte. These 5 companies are the watch list for the next coming month. Make sure that you go and subscribe to my channel to follow along with this series. Going to come out every month, might even come out 2 a month, I don't know. If you like this series, then make sure to like the video to show me and the algorithm that you like this type of content. With that said, I hope you just have a great rest of your day. Bye bye.